Most of you traders train pin bar setup this way. You spot a good uptrend. As you can see, it's a perfect uptrend. Then alongside the uptrend, you spot a good pin bar setup. As you can see, this is a very perfect pin bar setup. Then what you do next is you place a trade. You enter the trade at the close of the pin bar and you place your stop loss right below the pin bar, as you can see here. So what you do next, you hope that the market will go up in this direction of the trend. And usually the market doesn't go that way. Usually the market will hit the stop loss, as you can see here. So this way of trading is a very blind way of trading. It's like you're trading the market with your eyes closed. Because you trade this way, it will be very hard to be profitable because you just see the pin bar and then place the trade and hope that the trade works out. So there is more information hidden behind the pin bar. And once you unlock this information, you get to understand the strength of the pin bar. Then you decide based on the strength if it's a very high probability pin bar or not. Then you can decide from there if you would like to place the trade and you can add more money onto that particular trade or not. But I will show you all this information on how to read the information hidden behind the pin bar in this video. And I'm not going to explain or define what the pin bar is because you already know that. There is a lot of information about what the pin bar is and all the detailed definition of the pin bar. Rather, I will reveal the hidden information beyond the pin bar for you so that you can stop losing trades. Let's get started. When you look into these two pin bars right here, which one do you think worked out? Bear in mind that these pin bar both are perfect. They are according to the textbook examples. So which one do you think worked out? So the answer is no, you don't know which one worked out because these pin bar look the same and they all look perfect, as you can see. How about if I give you more information beyond these pin bars? Now, can you tell the difference now that you can see the information beyond each pin bar? For example, this pin bar looks like this in a smaller time frame. And also this particular one looks like this also in a smaller time frame. Now, can you spot the difference? The answer is probably yes now because there is more information about these pin bars other than the actual definition of the pin bar. So let me show you in details how to read this information beyond the pin bar. First things first, this pin bar that you see right here is the one that worked out. But I need to show you the details as to why it worked out. So let's dive into it. So if you look into this setup, you'll notice that this complete pin bar is in a daily time frame. And if you go lower into a smaller time frame, which is 1 hour in this case, you will see that the building blocks of the pin bar are looking this way. So the pin bar is made out of two legs, which is the left leg and the right leg. So both of these legs tell us the information about how strong the pin bar is. So that is the information that we'll use to make a decision whether this is a high probability pin bar or not. So how you do it, you study the left leg first, because the left leg will give us more information about how to study or read the right leg of the pin bar. So the information we look for is the strength of candles, as you can see, and how the market actually moved. For example, in this left leg, you'll see that the market pushed up with some green candles, which is promising some power behind the candles. And the stronger pullback came in. Then it went up again. But you'll notice here there was a bit of tails of these candles, which symbols the fight between the buyers and the sellers. So there was a bit of a fight in this area. So you'll notice that the left leg completed with some strong candle, which was followed by another pullback before the right leg started. So if you look into this information, it doesn't tell us up until we read the right leg. So if we study the right leg, you will notice that the right leg started off with some powerful candles, as you can see, going down. And you can see the tails here, but those two candles almost was equal to the left leg start, which is good. Then going down, you'll notice that the right leg completed ahead of the left leg, which is also good. So the right leg becomes the deciding factor. So you compare the right leg to the left leg and see which one was stronger in order for you to make a decision if you want to take the trade or not. So in this case, the right leg was very strong. So if you were to count the number of candles in the left leg, you will notice that there were a lot more candles compared to the right leg, which makes the right leg the stronger one in this case. And that is the reason why this pin bar worked out. I will show you another powerful way to read the strength of the pin bar at the end of this video. Please keep watching. Alright, let's get into the example of a failed pin bar. So if you look into this setup, you'll see that this complete pin bar is in a daily time frame, and the building blocks of it are in 1 hour time frame. So if you read the legs of this pin bar, which is the left leg and the right leg, you'll notice that the left leg was much stronger by looking at the candles, and there was a little bit of a fight here, but still the left leg was the strongest, it seems. Now if you look at the right leg, you will see that it started off stronger and smaller pin bar came in the opposite direction and it pushed again a little bit stronger. Then a stronger pullback came. Then it started recovering from that pullback and it was pushing up a little bit, and another pin bar came and the market died down. So if you look into this setup, it almost feels like this was a swing and this was a pullback of that particular swing. That's how less powerful the right leg seems in this regard. So if you were to compare these, you will see that the right leg is very weak compared to the left leg. So that's why this pin bar ended up failing. It's because the right leg, this deciding factor, was appearing like a pullback of a swing. If we were to look at it in terms of the trend, then the market, as you can see, will continue this way, and which it did, and that's why this particular pin bar failed. Now let me show you this powerful way to read the strength of the pin bar. As you can see here, we still have the previous example of a failed pin bar, and this way uses the volume indicator, as you can see right here. So the power of this is brought in by the volume itself, because the volume tells us the information behind the candles. So the volume will tell us if there were strong investors or traders behind this trend or not. So in this case, we'll start with the left leg and look at the volume of the left leg. As you can see, the volume started off smaller, then it kept on going as the market was coming down on the left leg. So the volume completed off in a higher bar, which means there was a lot of activities happening in this case. So the overall volume of the left leg is way stronger compared to the volume of the right leg. As you can see, the volume of the right leg was just flat. So this way is the best way of reading if there was investors beyond these legs. And this will tell you the details as to whether the pin bar is the high probability pin bar or not. So this volume becomes another added powerful information behind each leg of a pin bar, which is the left and the right leg. So this example was an example of a worked out pin bar. You will notice that we used this example in a previous example. Now I want to show you how is the volume defining the information about this pin bar. So again, if you look at the left leg of this pin bar and its volume, you'll see the volume started off small and it kept on growing and dipped here because of the pullback, and it kept on growing as the market was going, and it dipped again on that pullback there. And if you compare this volume with the right leg volume, the right leg volume was outperforming the whole left leg volume, as you can see. So this becomes a lot more powerful, really, because you see now the right leg has some investors behind it. It has some traders behind it, which is the most powerful information to have as a trader. One of the most powerful candlestick setups to learn about is the inside bar setup, and I teach it in detail in this video.